Hey, welcome to the Monday Morning Podcast. As promised, I've got my buddy Ryan Dinse on here to talk crypto. He's going to tell me where I went wrong with those rankings. So we'll start with a bit of a macro chat and then get straight to those rankings. So Ryan, how you doing today?
Good, Lucky. How are you?
Yeah, not too bad. Can't complain.
Out of
But yeah,
lockdown. Out of
so
lockdown tomorrow.
well, that's what they say. No
Wednesday.
big deal. But yeah, so I did this ranking game last week, Ryan. I sent you those rankings. I sort of divided by usefulness and worthy of investment. But let's just talk a bit more about the big picture at the moment.
Yep.
So Bitcoin's made a move. I believe it's hovering around US 37K at the moment.
Yep.
So that's sort of broken it out of that range. I saw some headlines saying it was because of an Amazon job listing. Basically, people speculating that there'll be an Amazon coin or they'll accept cryptocurrency as a form of payment on their platform. Is that really what's happening? Could you give me a rundown on that?
Yeah. So as you said, yeah, Bitcoin had a huge move over the last few days, and whenever that happens, what happens is everyone Googles to say, well, what's behind this move in Bitcoin, and they'll either look for an Elon Musk comment, tweet, or they'll look to try and attribute the price move to a specific event, and people do that in share markets as well. And sometimes that has a basis in truth in crypto, but a lot of the time it's exaggerated. So, for example, that Amazon job posting had been there for a couple of days already. I'd seen it a few days ago. Didn't make much of a move. The big move came about on Sunday, Monday, and to be honest with you, my take on it is it was basically more to do with the charts, more to do with the technical aspects, along with some other fundamental drivers of Bitcoin and crypto adoption, which are happening all the time, despite the negative news. But just from the charts alone, we had 30K, the 30K level tested it was the third time it was tested in this current downturn since it fell a month or two ago. And so we had this third time with 30K basically survived that test. Everyone said, if it breaks 30K again, it's going to fall down to 20K. And it broke 30K briefly for a couple of days or a day, and then it came back up. And there wasn't a huge amount of volume on the move up, but it sort of suggested that despite all the fear out there and despite all the negativity, that the people holding at this level were going to hold, that they weren't going to panic sell. And so then we had a few days of the price just gradually moving higher, not on huge amounts of volume. Over the weekend, it started to move higher. And then on Sunday, Monday, we had this huge spike, which was essentially what it was a short squeeze. So a short is when someone's betting on the price going down. And there was a huge amount of shorts about that $36,000 level. And what happened was a lot of these shorts are what are called naked short sellers, which means they've shorted and they've not got any other position to cover that. So what happens there is if you're betting on the price going down, but then the price starts moving up, then at some stage you have to buy to close that position. So that's the mechanics of it. It's sort of the opposite of a stop loss. It's like a stop loss, but on the way up. And so what happens, there was a huge amounts of shorts at that $36,000. They didn't have any cover, so they're called naked short sellers. 36 got breached and it kept on going up really quickly. So a bunch of buyers came in, and that meant the short positions had to cover. So we even seen on Binance perpetuals, which is sort of like a derivatives exchange, the price went as high as $48,000 at one stage, but on the spot prices, which is the normal prices, it went about 40,000 or just over 40,000 briefly. And a lot of that was that short squeeze. So that was the dynamics of the big move. But if you take a step back, the actual big thing was that 30K level held. We seem to be breaking out of that downtrend, which could be a period of sideways for Bitcoin. And the interesting thing was that there was a bunch of people started buying as soon as it looked like that downtrend was broken. So in my opinion, there's a lot of money sitting, waiting to take a position. And of course, they're going to try and get it cheaper if they can. But when the price started ticking up and that short squeeze came in, I reckon you also had a bunch of fundamental buyers desperate to get a position as well, buying in. So they were competing with the short squeeze essentially as well. So that's my take on what's happened. I think going forward now, this, I don't think it will keep on rocketing up every day, but that break of the $36,000 level was pretty important from a technical analysis perspective. A bunch of my moving averages that I follow are starting to tick up. One of my momentum indicators has triggered a buy. A quant fund that I know had a buy like about 34,000. I'm waiting on another momentum indicator to trigger another buy. So traders will be looking at the same stuff I'm looking at. So there'll be a bunch of people that missed this move looking to get a position, and it'll be interesting to see if that $36,000 break holds. If it does, crypto being crypto, you could see, huge moves over the next couple months, which, a month ago, no one would have thought possible. But that's crypto for you. It's like time at warp speed compared to the stock market.
Yeah. Yeah. Well, that was a big move really quickly. I guess it's a bit like GameStop in some ways, that sort of large short positions just getting blown out of the water very quickly. Just a quick one. I don't want to get too much into this, but what's your knowledge of sort of larger crypto funds taking large short positions? And do you think this was sort of like Melvin and Citadel all over again? Like, is there just like a version of Melvin and Citadel in the crypto world now?
Well, to give you a conspiracy theory, Lockie, because I know you love conspiracy theories. There was a theory that a lot of these naked short sellers were deliberately trying to suppress the price, and these were funds, like traditional funds as well, trying to buy Bitcoin. So one way to do that is you use short positions, so you use derivatives to try and keep the price down, and as long as there's no demand coming out of the way, you can gradually push the price down. And if you're actually buying, you can use that price suppression to build a position over time. And this kind of thing goes on in the financial world in a number of industries. I mean, the classic one is gold. A lot of people think the gold price doesn't reflect the reality of demand because the paper market is 350 times larger than the spot gold demand. But where Bitcoin and something like gold differ is that because Bitcoin is on chain, and it's more transparent than, say, the gold market where no one knows what the true gold holdings are, at some point, the spot price is the source of truth. And if the spot price starts moving up, which is what happened over the last few days, then it doesn't matter what the derivatives markets are doing. At some point, the derivatives market has to follow the spot price. So the conspiracy theory was that there was a bunch of people trying to use derivatives to suppress the price so they could build up their Bitcoin holdings. And this short squeeze sort of flushed them out a little bit, and they had to cover. And if they want to buy, they're going to have to start buying quicker because they're a lot more susceptible to the spot price in Bitcoin. So that's one conspiracy theory. I've seen some data to potentially support that view happening. But yeah, it is a big differentiator of Bitcoin in particular versus traditional assets in that because it's on chain, it's very hard for these big financial firms to play around with derivatives too much because the spot price, can result in huge losses if they get squeezed like this. So I think there's something happening there. I don't know exactly what, but it could be something like that. There are a bunch of Bitcoin ETF applications in America out there at the moment. And I think at some stage we're going to get a Bitcoin ETF, and that's going to be a huge catalyst for the Bitcoin price. And I wonder if there's some shenanigans behind the scenes where some of these firms are trying to buy in Bitcoin to sort of seed their ETFs and make sure they've got, exposure before approval. So yeah, there's a few things happening.
Yeah, wow, that's a lot of information to take in, and you're definitely a bit more on the ball than I am. But what I really want to do now is we'll get straight to it. So I did these rankings before, and you'll probably tell me I'm completely off base, but I think we can all agree whether by usefulness or worthy of investment, Ripple's down the bottom.
Yeah, so I'm looking at your rankings here, and I'll just go through them briefly. So you've got as usefulness Ethereum ahead of Bitcoin, which is interesting. And I suppose the way you're looking at that makes sense in the sense that there's a lot more projects built on the Ethereum blockchain than there is on Bitcoin. A lot of the innovation in decentralized finance, in in-game blockchain assets, in non-fungible tokens, which are called NFTs, which is like art and stuff like that. All of that is being built on Ethereum right now. Where that Bitcoin Ethereum blockchain usefulness might change is that Bitcoin is moving in that direction where there are layer twos being built on top of it. It's just going at a lot slower pace. And Bitcoin maximalists will say that's because they want to make sure that the system stays decentralized and censorship resistant above all else. And that's a fair point, in my opinion. But we are at the stage where there are layer 2 technologies like Lightning, which enable micropayments, like free and instant micropayments. There's Blockstream have a bunch of products they're building on top of
and then there's the Strike El Salvador relationship.
Strike El Salvador stuff. So usefulness is a hard thing to say. I'll definitely say there's more Ethereum innovation on Ethereum than Bitcoin, but that could flip, because the risk with Ethereum, and this goes for any blockchain apart from Bitcoin, is it going to, Bitcoin survived since what, 2009, is it, in the wild without being hacked or come under any sort of regulatory capture or any sort of government control. The other blockchains, I think Ethereum was first mined in 2015. They've been in the wild for a while, but they're still in that, not experimental phase, but Ethereum are in the midst of changing their consensus mechanism right now. They're moving to a proof of stake mechanism. And how that will play out, will it prove to be censorship resistant and open source and useful? You still don't know for sure. So for all its innovation on top of it, that innovation could potentially move to Bitcoin if Bitcoin layers have the capability to do like decentralized finance on Bitcoin. We're definitely nowhere near that yet. And a lot of Ethereum supporters would say that's never going to happen. And that's fair enough. It might not. But the usefulness is sort of something that's still, long term, you still can't say whether Bitcoin or Ethereum will be more useful. Coming to your third, fourth, and fifth, so that's Tether, USD Coin, and Binance Coin. They're all essentially stable coins, aren't they?
Yep.
So stable coins, for people that don't know, are basically like dollars on the blockchain. So they're dollar representations that live on the blockchain. And USD Coin, for example, they're interesting. They've got some partnership with Visa. So Visa, are looking at settling things on Ethereum using USD Coin. So I'll say everyone hears all this negativity about stable coins and things like that, but a company like Visa, I'm sure they do their due diligence, and they're looking at integrating stable coins into their settlement mechanisms. And that's because fundamentally blockchains are a lot more efficient for settlement than the legacy financial system. So that's interesting. You've put Tether ahead of USD Coin, and I suppose from a trading perspective, Tether is the most widely used stablecoin in terms of trading on exchanges. So it is got that use as a good sort of trading pair. And then you've got a few different blockchains, and they're what I would call layer 1 blockchains. So Cardano, Polkadot, Dogecoin, and Ripple. Look, I think Polkadot, from what I still need to do a lot more research on Polkadot, even though it's been around for a while, but Polkadot looks like it's got a lot of potential. They basically allow disparate blockchains to come together. So if you think about it, a blockchain that brings other blockchains together. And I know, for example, Engine Coin, who are a gaming token, a gaming project that I really like, they've moved from Ethereum for the next stage of the development to Polkadot, because they said Polkadot was more efficient for the number of transactions they needed to make and linking in with other parts of the crypto ecosystem. So I would probably arguably put Polkadot a lot higher. Cardano, look, there's a lot of people that like Cardano. I'm not a huge fan. They're basically like an Ethereum, not clone, but one of the developers that started off with Ethereum, Charles Hoskinson, is Cardano. And the approach they took was to
academic.
Yeah, so academic peer review as opposed to free market innovation. And look, I'm not a fan of that approach in any form of, in my investing experience, I
almost wound up in academia myself, and it's not a good environment for getting things done or doing new things.
It's a good environment for getting grants and government assistance and all this stuff, and people get tenure and they get wages. I'm not writing off academic research, because ultimately a lot of good ideas do come from it, but from a commercial point of view, I much prefer the Ethereum Wild West approach, despite all its flaws, than Cardano. But a lot of people say that Cardano is a better system. At the moment, it's not got the traction of Ethereum. It's not got the projects building on top. We'll see if that changes. Dogecoin, Elon Musk's favorite. It's basically a nothing project that is a trader's delight. And if you're a big Elon Musk fan, buy a little and hold on to it and see what happens. I've never owned any Dogecoin, and I never will. Technically speaking, it's a dead project. Even the creator said he created it as a meme.
Look, I've got a little theory about that on Dogecoin. So it's a joke, but it does exist. It's a real blockchain, and I think its main use case is in sort of like internet meme forums as a tipping system, like,
Yep.
if you're making jokes, you may as well pay in jokes. So I think that's its only real use case. But
Yeah, the beauty of cryptocurrency is things can evolve and change beyond even what the creators thought they would be. The thing from a technical aspect is that if anything of substance was built on Dogecoin, then it could be hacked tomorrow, because there's not the hash power, there's not the protection to protect that blockchain. So there's been no like coders on it or developers working on it. Elon Musk,
yeah,
I think Elon Musk, he thinks he's a bit of a comedian, and that's fine. But
yeah.
I think he thinks it'd be really funny if he could take this meme project and turn it into a viable part of the financial system. And who knows? Yeah, he's done a lot in his life. Maybe he can, but it's not one I would waste much time on.
Speculative,
Yeah, speculative and fun to trade, maybe, and fun to own a meme coin. And like you said, maybe there is a market for meme coins. Maybe that there's something there that
comedians get paid every day in real life. Like there is money in jokes.
Yeah, so not something I'm into, but the beauty of cryptocurrencies is I'm just one opinion. I don't know everything. There's so much happening, and there's so much changing all the time that, with a bit of research, you can easily find projects which might fit with your own worldview and own. I would just be careful. And on that note, though, I would say is if you ever do get into cryptocurrencies, then the first thing to do is buy some Bitcoin and hold it, and make sure that's a decent part of whatever your overall crypto portfolio is, because Bitcoin is that should always be the anchor to the rest of your crypto portfolio. And Ethereum, you could almost argue that as well, but definitely Bitcoin.
Yeah. And as before at the start, Ripple down the bottom there in the usefulness rankings. It's a centralized project. I've never really rated it, but
Ripple is one that every time like there's a bull market and I get a friend who wants to get into crypto, the first thing they say to me is, "Oh, Ripple's good, isn't it?" Because it's got a semi-easy, understandable value proposition in that it makes transferring money easier. It makes it's better than the old Swifte legacy system. It makes that sort of not peer-to-peer, but that intermediary step between sending actual dollars to, say, Britain, for example, or whatever. It works as that sort of transitional currency. That's, as far as I know, is how it's designed to work. The problem there is that you've got a lot of CBDCs coming out making their own projects, and none of them are mentioning Ripple. So it sounds, I don't know, it's been around for a while. It's had a lot of hype. It's had a high market cap. As far as I know, Ripple hasn't got that much market traction, and it doesn't look like any of the central bank projects are considering using Ripple. And if they're going to do their own blockchain systems and they're not going to use Ripple, then you wonder where the use case for Ripple comes in. But I'm sure a lot of Ripple fans will tell me something there.
And then there's the regulatory SEC stuff lurking in the background, but that I'm not an expert on that, so I mean,
everything in crypto has got some regulatory thing. So I don't
fair.
I don't pay too much attention. They might have done stuff wrong. They might have, or they might not have. But I think a lot of crypto comes under unfair criticisms from regulators that just want to regulate every single thing out of existence. Keep control. So I'll actually give benefit of the doubt to Ripple there. Yeah. I don't think that's fun. Yeah.
Okay, cool. Well, we'll just fly through the worthy of investment rankings. That this isn't worthy of trading rankings. So we're thinking more long-term here. I've got Bitcoin 1, Ethereum 2, Cardano, Polkadot. You'll dispute that, I know. Number 5, Binance Coin. Basically just chucked all the stable coins towards the end there, and Dogecoin. Maybe I'm wrong about that. And then Ripple.
If you told me I could only put some money or into 3 of these and hold it for like 5 years. And right now, and this is not investment advice because the place changes so quickly, I could change my mind on this within a few months. But right now, if you said, Ryan, you can only invest in 3 and you've got to hold them for 5 years, I would probably do Bitcoin, Ethereum, and Polkadot. And that's what
that makes sense based on what you told me about Cardano before.
And that's just my opinion. I mean, and things can change. Binance Coin, talking about actual Binance Coin, the coin, not the stable coin. It's an interesting one, but it seems to me like a pseudo equity in Binance. And I think the problem Binance has right now is that a lot of the regulators are going after them because they're a centralized entity. And I think the projects that will survive out in the wild will be the ones that managed to maintain enough decentralization to evade any sort of regulatory capture. And I suspect Binance will find that hard, especially given China's current stance and potential, hardening of the rules elsewhere in the world. The guy there is quite a public figure. That's an easy target. Whereas Bitcoin has no central person you can go to. Ethereum, to a degree, is decentralized more. Vitalik is obviously a
what are you
figurehead.
going to do? Lock up Vitalik.
But with Binance Coin itself, the blockchain itself isn't that decentralized. It's a bunch of validators, mostly run by Binance or friends of Binance, and that is, that's easy for governments to start impinging.
It had a fair run, and from my understanding, Binance Coin is sort of just like a loyalty rewards program for the platform, and there's value in that. But again, if you're watching the space quite closely with the sort of anti-competitive practices that they're pursuing over there, I don't know, that could change quite quickly. And of course, moving on, you would never really invest in stablecoins. You may as well do Forex, right?
Look, the last point I'd make on Binance Coin is that if there was another bull run, then Binance Coin is probably a good one to trade, because Binance is a very popular exchange. And if that remains the case, then Binance Coin does capture some of that value through a burn mechanism, I think. So as a trade, Binance Coin is something to keep on your radar. But for long-term investment, Bitcoin, Ethereum, and Polkadot, I think, have more substance to them. The stable coins themselves, you can't make money from holding them, but you can make money in the decentralized finance ecosystem through basically lending them out. Yield, so generate yield through lending them out. And at the moment, in a strategy I'm doing with subscribers of my new money investor service, we're getting about 6% yield on a stable coin strategy, which isn't too bad, say, compared to the banks. At its peak, though, it was doing like 20 to 30%. So that yield varies with demand for stable coins. And demand for stable coins is a function of basically the crypto market. If the crypto market's running hot, a lot of traders want to get access to money fast so they can make, leverage bets, and that pushes up the interest rate that depositors of those stable coins get. It's a little bit of a complex system, but essentially it's a really cool, it's the free market for money in a way. It's borrowers and lenders meet without a central bank, and the interest rate is set according to that supply and demand. And that's, a free market for money without central bank intervention and all the problems that tends to bring.
For like the first time ever.
First time ever, or at least since, the Wild West of 1800s, America, maybe.
I guess the point from that, Ryan, is the actual stable coins are not investments per se until you do something with them elsewhere, right?
Correct.
If that might be a bit easier for people to understand. You get them, but you don't just hang on to it because you think the US dollar is going to go up and you're watching the dollar index chart real closely. You may as well be playing in Forex. But if you do something with the stable coin, then it gets way more interesting.
Yeah, that's an interesting point, actually. So, for example, if you're an Australian and you thought the Australian dollar was going to go down, you could potentially put some money in a stable coin, because most of them are pegged or try and maintain a peg to the US dollar. So actually, it's funny you say that, because in the stablecoin strategy I'm doing at the moment, I'm getting a yield of about 6% per annum right now, although it's averaged about 10.4% over the last 3 months. But I've actually also got about 5% return in appreciation because the Aussie dollar has gone down. I've made that yield, plus I've made some money on the Aussie dollar going down against the US dollar. Of course, that could reverse as well. So that's something to bear in mind. But you could conceivably use stable coins if you were looking to pay a US dollar pair with something else, with say the Aussie dollar. That's a bit esoteric, but it's something.
It's interesting. There's a sort of Forex sort of macro input to that stable coin environment. That's not really my field of expertise, but it sounds really interesting. As for where the investment Dogecoin, Ripple, we've gone through those. I think what we've done today is given people a nice, good look at what's happening in the market, what coins out there are, worthy of your time and attention, the reasons why, the justifications for holding. All of that, I think, is real valuable. And, I couldn't have done it without you, Ryan.
Glad to help, Lucky.
No, this was a lot of fun. Thank you so much. And I'll probably talk to you relatively soon about something completely different.
Sounds good. Look forward to hearing.
So, thank you so much for coming on, Ryan, and I'll speak to you soon.
Cheers.
Hey, that was a great chat I just had with my buddy Ryan Dinse about all things crypto. I'm sure there are crypto enthusiasts out there who have their own view on how to rank these. So I'd love to see what you guys actually think. Chuck it in the comments section and have a bit of a debate. We'll see how it goes. By all means, also check out Ryan Dinse's 2 crypto services. They're really interesting. And if you're into this part of the market, they're a great guide. As always, like, subscribe, get in touch. We'd love to hear from you.